Last week, our government in China reached a deal that, among other things, has Chinese buying American soybeans again. That's basically where we were before the trade war. But regardless, it's a win for the companies that make farm equipment, like Agco. Now, when Agco reported last Friday, the company delivered a small top-line beat and a healthy bottom-line beat. Management raising their full-year earnings forecast and rolling out a $300 million buyback. Still, it wasn't enough to get the stock rallying. Shares actually dropped nearly 3% on Friday. I don't really understand that. So is there a reason to worry here? Let's check in with Eric Hansotia. He's the chairman, president, and CEO of Agco to find out. Mr. Hansotia, welcome back to Mad Money.
Great to see you again, Jim.
Eric, I'm looking at things and deciding, you know what, Europe was really good, and the United States, okay, not so good, but maybe with a change in ag policy, U.S. could be good. Your theory had been trough when we saw you last. You sticking by that?
Absolutely. This is the trough year. It's the bottom of the business cycle. You know, in farmers' terms, essentially it's the winter season. But it's very predictable that spring is just around the corner, and we're going to be back in growth mode. Farmers' fleets have been aging. They thirst for this new technology we've been developing, and so we're going to be a growth story here sometime soon.
Okay, so tell me, is it better for you if the government gives farmers aid or if the Chinese buy soy?
That one's a clear answer. If you talk to our farmers, they much more value certainty in real markets than a government payout. They don't know if a government payout will happen again the following year, and with these big equipment purchases, that's usually a multi-year decision. So they would much rather have clarity in the market. In fact, not only in this market, but every other market wants to know the rules of the game. So even other farmers around the world were holding off, not knowing how this deal was going to land. This deal is certainly net positive for the U.S. farmer, both the subsidy payment, but more importantly, the commitment of purchases from China to the U.S., much like they had been in the past. But then it also provides clarity for farmers all around the world.
All right, so a farmer who has aging fleet, would they be drawn toward a precision ag, knowing that therefore they could make a better yield per acre?
Absolutely. That's why we're investing so heavily. You know, we did 5 big strategic shifts over the last couple of years, working our tail off on that. But the biggest one was investing heavily in precision ag. We made a $2.2 billion move to create this new business called Precision Technologies Multiplied, the biggest, most capable tech group for the mixed fleet, meaning we put technology on any brand of equipment, not only in our own brand. That was number one. Number two was we sold off our grain and protein, our lowest growth, lowest margin business. Number three, resolved our issues with TAFE to be able to get the activist behavior out, but then also allow ourselves to do share buybacks. That's part of what you talked about. We announced $1 billion share buyback commitment because we're so confident in our future. And then number 3 and 4 were, number 1 is a project called Reimagine, reinventing how we do all the work inside, using AI to automate, offshore, outsource a lot of our work. We're saving $300 million on a little over $1 billion base. And finally, redesigning our distribution network to go to the farmer instead of having the farmer come to a brick and mortar operation. We do everything on the farm. We call that farmer core. But the primary focus was growth in precision ag and leadership in precision ag, because that's what saves the farmer money. It saves them on inputs like fertilizer or seed or fuel or labor, and it helps them have higher yields. One of the big exciting things we came out with this year was retrofit autonomy kits. So these are technologies that you can put on either our brand or other brands of equipment to turn an existing tractor into an autonomous tractor for certain applications on the farm. That's just one.
All right, so talk to me about labor for a second. Is it hard to find people, harder than ever? I know we have a tight immigration policy in our country. I cannot believe that farmers can easily just go down the block and find people to drive tractors. How many tractors can I drive at once if I am now a new, well-educated, and competent with digital farmer?
Yes. Well, this is a problem all around the world. When I spend a lot of time visiting with farmers, and I ask them, what are your pain points? I don't ask them about their equipment, I ask them about their business. And right at the top of the list is always, whether I'm in Europe or South America or North America, doesn't matter. Labor is a big challenge for them in the rural areas. And so that's why we need to make the machines not only easier to operate, but in certain applications, we actually can take the operator completely out of the cab and have the machine be able to do that function. Like in the harvesting of grain application, it drives the tractor alongside the combine, where the combine will summon the tractor, it comes along, finds the combine, they drive next to each other, the combine unloads the grain, When it's done, it releases and the tractor drives off. No one was ever in the tractor. Second application is going to be tillage. You just bring the tractor to the field. It knows the field boundaries, and it calculates the optimal route. You turn it loose, and it'll till that entire field in an optimal way. Those are the first applications. We've got many more right behind that. That essentially does not only the job without the labor, but it oftentimes does the job better than a human could have done on their own.
All right, one last question. In your most recent conference call, you talk about income. You say net farm income has improved, supported by government programs. We went over that, and record high cattle prices. Now, do the same farmers that raise cattle also need your equipment?
Yes, if you simplify it way down, there's grain producers and livestock producers. And oftentimes they're kind of, now, do sometimes they do both? Yes. But if you segment it down to a simple form, the grain producers have been hurt these last few years because of low grain prices, and a lot of the tariffs have hit them because the retaliatory tariffs where China stopped buying U.S. grain. Well, when the grain prices are low, that's a net positive for the livestock producers. They're buying a cheaper input. And over the last few years, there's been a lot of droughts, so the herd of livestock has been going down. So beef prices are up because the volume is down, and the profitability is up because their inputs are lower cost. So they're very profitable right now. We sell equipment to harvest hay and things like that to the livestock producers, or manage the operations around their livestock, moving feed, moving manure, farmyard applications for a tractor as an example. So that we serve both farmers. But we sell a lot more equipment to the grain farmers.
Fair enough. Well, look, I'm sticking with your trough year, Paul, and I'm glad that you're taking out all those costs, because when it does happen, we know it does happen very quickly. You do not have months to wait once the cycle turns. Eric Hansotia, Chairman, President, CEO of Agco. Thank you so much, Eric.
Thanks, Jim.
Absolutely.
Really enjoyed it.
Mad Money's back in for the break.